Hello, everyone. This is Ace here. So, I've created this channel to help you become better traders, right? And I figured that most of the content out there for trading is mostly focusing on strategies and better entries and the analytical part of trading. And what I'm going to create is a mini series that is going to focus on the stuff that is beyond trading, and the first lesson, the first episode would be around the trading statistics, understanding trading statistics, risk to reward, how your mentality or psychology affect your performance. What does it mean to be consistent? What does it mean to be okay with losing? And other things that will be interesting. There will be numbers in here, so don't be afraid. If you're a trader, you should be okay with numbers. And without further ado, let's jump into our today's lesson. So this sheet uh, is a sheet that show you win rate versus risk to reward. So this is the win rate. This is risk to reward that you're aiming for, and every sale is trade expectancy. It means that if you're risking $200 per trade, how much you expect to gain on average for the long run based on your risk to reward and win rate, right? Um, so let's take a couple of scenarios to figure out, what it means to be the numbers behind your trading statistics or strategy. So let's say you're a beginner trader, right? And you have 30% win rate. Okay, you have a 30% win rate, and you studied ICT or SMC, whatever, and you're aiming for 1 to 2 risk to reward to be fixed. It means that your trade expectancy is minus $20, meaning that on average for the long run, we're going to lose 20% per each trade that you're taking if you're in a 30% 1 to 2 risk to reward, right? Um, the reality is a little bit more challenging because 30% win rate means that it's not that on every trade it's either you're going to win 30% of the time and losing 70% of the time. There is distribution for, let's say, 50%, for example. 50% doesn't mean that you're on every win you have one loss and it's like win loss win loss win loss, right? There are consecutive wins and losses that might make you look better trader or worse trader. And sometimes this can affect your performance, to be honest. I'm talking about myself at the beginning. I had a better month. I've increased my risk. And then next month, I blew it all, right? So you need to understand that this number, this win rate, doesn't mean that, you're going to win and lose in evenly distributed times, right? So 30%, 1 to 2, right? And you're aspiring trader, you're consistently learning and improving. And let's say you want to improve your win rate. Let's say you jump into this 35% win rate, right? But the pressure makes you close trades earlier than 1 to 2, or maybe you're doing something like risking more and not following your risk plan. This means that instead of 1 to 2 you're going to be going upwards and into this like 1.5 1.7 risk reward, and you're still losing instead of like focusing on 1 to 2 and becoming like being on the positive side of trade expectancy. So you need to understand the numbers behind everything. um, let's take like another scenario. Let's say you're I don't know, intermediate trader, 50% aiming for 1 to 2. You're in this column, um, and you're doing good job. Most of the time you're 1 to 2 traders, sometimes a little bit below, and just to show you the how good it is to focus on the numbers. Let's say it's hard for you to keep your 1 to 2 risk to reward. Uh, at the end of the trade, there is a lot of tension and fear, and you're afraid of losing a trade. For example, what you can consider is that, let's say I'm jumping into the 60%. Look at this. Let's highlight it. Okay, let's do this one. No, it won't let me. Bold. So we have 1.5 risk to reward and 60% win rate. It's basically the same, and 50% 1.2 risk to reward. So you need to understand that you need to fit your strategy into your psychology. And sometimes, meaning that less of a risk to reward, but better win rate might be the same for you, but maybe it's better for you in terms of psychology and mentality and make you better trader for the next set of trades, right? So you need to understand that you don't need to be fixed into those numbers. You need to aim for an area and say, let's say I want to be between 50 to 60%, and I want to be between 1.5 into 2 risk to reward. And you don't need to be strict. I mean, you need to look at the chart and see what it gives you and feed it into your psychology traits in order to be better. And you need to understand that losing is part of the game. 50% win rate, meaning that you're going to lose, and you're going to lose a lot. And if, whenever you're losing, your mentality or psychology makes you worse in your next trade, you're harming your statistics. And instead of being in 50%, you're going down to 45%. And instead of 1 to 2, you're going into 1.5 or maybe less than that. And your expectancy goes lower. This is why you need to understand the numbers and you need to be disciplined. I would say that being disciplined is probably the most important thing as a trader. Um, and understanding the numbers and being disciplined will make you a better trader for sure. And your focus should be on the long run. You might start on 30%, but your goal is to improve, whether in win rate or in risk reward. Focus on one thing and do it, and analyze your losing trade. Ask yourself, is it by my strategy, is it a really losing trade or not? Am I taking the right risk to reward, or I can do more or less based on my strategy? And improve yourself consistently, being disciplined, and this will make you a better trader. So now let's jump into the second part of this video, and it's going to be around what does it mean to be consistent, right? How your equity curve grows with your risk to reward and win rate. So let's take a look at this calculator. Let's say we're at a 50% win rate. Our initial balance of our account is $10,000. Risk to reward is 1.2. Risk per trade is 2%. So I'm risking 2% of my balance every time. What this sheet is doing is basically generate 500 random trades based on the win rate that was given to make it close to our reality. And what you can see is that it's not, as I said, 50% is not one win, one loss. They're distributed along these 500 trades. So you have consecutive wins and loss, and in maximum you have, in this case, 8 consecutive wins and 8 consecutive losses. It means that it might be a case where you lose 8 times in a row, and that's fine based on the statistics. This is what I'm saying. You need to understand statistics, right? And what happened is that it takes you time to grow, but if you focus on being disciplined, it will happen. So let's have a look at this trade profile: 50%, 1 to 2, $10,000. what we can see here is that after 15 trades, the balance was not did not grow too much in terms of money, but it's like 25%. But after 100 trade, the grew is like 100%. That's now basically it's not a lot in terms of like probably money for you, but in terms of like gain in like percentages, that's a lot. It's like 100% on your account within, let's say you're taking 12 trades a month, it's like 8 months to double your money. That's insane. But it only happens if you're being disciplined and consistent with your strategy. Let's have a look at how the first year of this trader looks like. So you can see that basically the first 5 months, it's like what we call in trading consolidation. Not going that much up and down, and not growing that much. But then after a while, the consistency paid off, and you see the equity curve grew. And at the end of the year, he's tripling his money, right? The reason for that, by the way, is whenever you have a winning streak and you're consistent with your methodology, it grows your account. Look at this one, for example. Trade number 8, the balance is 10,700, and then after the winning streak, $12,600, right? And that's fine. I mean, it's part of the game. You're going to see ups and downs, but if you're consistent and disciplined, you're going to see improvement. And again, this is just a baseline, right? And this is one profile. But let's say this trader improved himself and he's now 60% win rate with 1.2. All of a sudden, these equity curves look much, much different. After 50 trades, he's doubling his money. After 100 trades, he's like doing 4 times his initial balance. It means that you need to be disciplined and consistent. I know that it's like, hey, you're saying it too much, but the only thing that stops you from being profitable is your discipline in everything in life. Okay? And if you're doing the same things over and over again, consistently improving, you'll become a better trader. So just to sum it up, I said discipline, consistency, that's fine. Focusing on your numbers, understand trade statistics, journal everything that you're doing. Understand the little things that makes you tick and move, understand your psychology and mental state. And if you want a link to these spreadsheets, comment below and let me know, and I'll send you a link. And if you like the content and you want to see the next episode about beyond trading, click the follow button, the subscribe button, and like, and do whatever it takes to see the next video, because it's going to be super interesting for you, something that you haven't seen anywhere else. Thank you, guys. Bye.